Good evening, everybody. This is my name is Luis Robles. Well, today we're gonna be talking about the Quick Access Chapter 4, exercise number 7. Okay, and well, what we have here is let's read the problem first. The following list includes temporary accounts from the December 31st adjust trial balance of Emico Co. Use these normal account balances to journalize closing entries. They're asking us here to prepare closing entries for a merchandiser, which is Emico Co. Okay. So the first thing we do here is we're gonna do the journal entries, and the number one entry is asking us to do is the record closing of credit balances in temporary accounts. So the credit balances that we have, the only one here is the sales. So what we do is we put sales here, on the debits with the balance, which is $605,000 versus the income summary here on the credits. Okay. That's actually, I forgot to tell you, it's close credit. That's the step number 1 that is called close credit balances in temporary accounts to income summary. Okay, now we're gonna move to the second entry. The second entry is record closing of debit balances in temporary accounts. Okay, so here we have the step number 2 is called close debit balances in temporary accounts to income summary. So basically what we're going to do is we're going to put on the credits all the sales, cost of goods sold, sales, salaries, expenses, all the expenses that originally have debit balance, but since this is a closing entry, we're going to put it in the credits. And that's going versus the income summary here. Okay, as you see. So what we do is we add all of them, and the balance of all of the additional, all of them is going to be equal to the income summary balance. Okay. Number 3. The number 3 tells to do record closing of income summary account. So here, what we do, we have the retained earnings. Is not here in the list, of course. So what's going to be the amount of the retained earnings? That's easy. That's going to be the sales, remember, minus these expenses here. Remember, is sales minus expenses is going to give us the retained earnings. So the retained earnings is going to be $6,500 versus the income summary is $6,500. Okay, that's step number 3 actually, and it's called the close income summary account. Okay, finally we have another account here, which is the dividends, and that's the last entry that we have to do. It's asking us now to do record closing of dividends accounts, which is called in the book step number 4, close dividends. So what we do is this is a closing entry, dividends on the credits for this amount $52,000 and retained earnings $52,000. Also, if you're gonna refresh your memory, make sure you're doing everything right. You can check here in the book. Those are the entries again. This is what we just talk about. The steps 1, 2, 3, and 4 more in detail. And also you can come here, check my work. You can check your work, make sure everything's fine. I already checked it twice just to make sure, and I had a little error, in the amounts. but right now, I'm gonna check it again, and everything seems fine. Okay, so you have all the entries here with the right amounts. Okay, and I gonna record this video. I'm gonna post it in the group, and if you have any questions, please let me know. Thanks.